DraftKings may be up by 173.8% this year and could remain a Wall Street favorite. Since the start of 2023, DraftKings stock has made a stunning comeback, rising by nearly 174%. Even after this big run-up, a lot suggests that this leading online gambling company will stay on an upward trajectory. While future gains may come at a far slower pace, there's no need to fade this Wall Street favorite. Let's dive in. Here's why it's not too late to place a wager on DraftKings stock. Welcome to Timely Investment Research. This football season, plenty of gamblers are trying to cash in on bets placed on DraftKings' sportsbook platform. However, perhaps a better bet would have been entering a position in DraftKings stock at the start of the year. This once heavily favored online gambling play had clearly fallen to underdog status after having coughed back nearly all of its gains from 2020, 2021, and 2022. The market was downbeat about the company's future prospects, signaling a further derating ahead for the stock in 2023. Yet, over the past few quarters, sentiment has shifted back to bullish in a big way. No longer an underdog, DraftKings is a heavy favorite once again. But while DraftKings has resumed being a Wall Street darling, don't assume shares have become overhyped and at risk of reversing course. Analysts and investors alike are on the money with their current bullishness for shares. Here's why. DraftKings stock and its stunning comeback. Nearly a year ago, it seemed as if the situation with DraftKings was on the verge of going from bad to worse. While beating on revenue and reporting lower than expected losses, investors were reacting negatively to the prospect of slowing user growth. However, back in January, this heavy bearishness dissipated. In the weeks leading up to the release of fourth quarter 2022 results last February, investors bid up DraftKings stock in anticipation of much stronger results and updates to guidance than in the preceding quarter. This ended up playing out. During fourth quarter 2022, DraftKings revenue grew by a staggering 81% year over year. Guidance called for the company to hit positive earnings before interest, taxes, depreciation, and amortization in 2024. While the stock pulled back some post-earnings, as many of these same speculators sold on the news, this pullback was relatively modest. Shares quickly got back on an upward trajectory. The continued reporting of organic growth, combined with narrowing losses, have thus far enabled DraftKings to make a partial rebound in price. Better yet, even after the DraftKings' nearly 174% rally year-to-date, a further rally appears possible. How shares could keep running up the score. Even in the low teens per share, DraftKings stock appeared pricey to the valuation conscious. At current levels around $30 per share, value-oriented investors may consider DraftKings' valuation astronomical. Forecasts call for the company to report net losses both this year and next year. Still, as shares have traded sideways since August, and high interest rates mean the market remains not that enamored with shares in unprofitable companies, DraftKings could not only maintain its current valuation, but add to it in the months ahead. Valuation and interest rate worries notwithstanding, the market always likes a great growth story. Although legal sports betting and other types of online gambling have scaled up quickly in recent years, remember that the legalization wave isn't done just yet, including in states like California, Florida, and Texas. Plenty of large markets remain up for grabs. In existing markets, DraftKings may be poised to stay a leading operator. At least, that's the view of J.P. Morgan's Joseph Greff, who last month argued that the company has a strong moat, which will help keep competition at bay. Put it all together, and much suggests that DraftKings will stay in high-growth mode for the foreseeable future. Bottom line. Let's be clear. After more than doubling in price, it may be difficult for DraftKings to make a similarly sized move over the next 12 months. The prospect of continued high double-digit revenue growth and a continued move to generally accepted accounting principles profitability is already largely priced in. It's hard to see DraftKings suddenly disappointing in terms of operating performance anytime soon. The company has scaled back on the generous promotions and heavy advertising that led to big losses during its initial expansion phase. DraftKings, like other sportsbook operators, are also successfully shifted betting action toward parlay wagers, which offer greater payouts but have a much more pronounced house advantage. While future gains may come at a far slower pace, as these trends continue, there's no need to fade this favorite. Feel free to enter a position in DraftKings stock. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, And hey, don't forget to subscribe.